Hey Travis, how's it going?
Good, how you doing?
Good. I thought we said 8:30 and then I saw it 9 on my calendar. I'm like, wait a second, did it get changed?
Yeah. So did it automatically come over on your calendar?
Yeah, it did, but it just shows 9 a.m.
Huh. All right. Good enough. Let me actually. So how's your weekend?
Pretty good. How about yours?
That was good. Had to work actually a fair amount of it, but that's all right. Let's see, you should. Okay. Yeah, all right. So you should be a panelist now. Okay. Hey Dean. Hey Andrew, how's it going?
Oh, good.
Did you want to talk today on this morning, Andrew?
I can, yeah. I got a couple, just a couple little nuggets I think might be helpful.
Okay, sounds good.
I've been sort of reaching out to some of the different lenders that we have, and just a couple of little unique things I think that I want to remind these guys that we can do.
Sounds good. And we have Paul on today with Pennymac, so if you have any questions
Cool.
for him as well.
Yeah, I figured he'd probably bring up a couple good things. I wonder, I just saw actually Scott sent me a note, email that he got that looks like um, Fannie and Freddie are now doing like a kind of like a construction loan. It seems like uh, where you put 20% down, you have to put 20% down, but they loan you 90%, and you still avoid PMI at 20%. They do this. I'm not sure. I didn't read into the details too much of the basics, but I figured we'd probably see something from one of the different lenders that we work with. We'll probably
Yeah,
put something together.
like a rehab loan, like the 1003, like the
Kind of like a 203, yeah.
yeah,
Um, I think it just has it sounds like it has a little bit more benefits, like even just the fact that you're able to still avoid PMI and then get that
yeah,
extra 10%. And then also I think the options of like how you can actually apply that to what type of purchases and things like that. There was a couple of things in the listing. I'm not super knowledgeable on the 203K. Those things have been kind of weird. This seems like it'll run more like a traditional purchase loan, but with this extra benefit to the borrower.
okay. Uh, Paul, have you heard anything about that?
Yeah, so they've kind of done a couple different things. Unfortunately, we don't have construction loans right now. Um, but there is a couple different stipulations that you can kind of still be able to work with it. Basically, that company, whether it be the manufacturers of the home or something like that, they basically have to have been, like approved with us as far as being able to do loans and kind of working it through that way. I don't have necessarily all the details on it. I was actually just reading about that last week. But I can definitely share, I can look into it a little bit further for you guys and see what information I can get and share with you guys.
Okay. Yeah, it definitely sounds like an opportunity, especially right now. If anything, it could just broaden a few buyers' search options, knowing that they could get an extra 10% to put right back into the property that they are trying to get.
Yeah, absolutely. I mean, it's definitely a pretty good program. I just don't know that we've aligned quite with it yet.
Yeah,
I just got to figure out what kind of requirements that they have to have as far as the builders and how they would kind of put that in place.
all right. Cool. Well, you should be able to share your screen, Paul, if you have a presentation or whatever.
Yeah, sure. So I was just actually going to go through real quick. I'm not sure if anybody, how familiar everybody is with the portal or anything like that, but just kind of want to go in, price scenario, show you guys how the portal works, and then a couple little tricks that are in there that can sometimes help out. And then obviously leave it open to you guys to answer any questions that you guys might have.
Okay, sounds good.
Okay, and can you guys see my screen?
Yes.
Yep.
Okay. So basically, this is our pricing scenario. Pretty straightforward here. And do you guys have any kind of scenarios that you guys are working right now that we'd like to see?
Do you have any, Andrew?
I think what I have right now that's sort of out there. I mean, the one that I'm working on is a 5. What's he got? A 603 credit score. I think I reached out. You guys don't even have anything that low.
Yeah. So our lowest FICO is 620, unless it's like a VA loan over $1 million, and requires 700. Sometimes we can, kind of waive that. It really just depends on the situation. That's the only time that you'll see that we would need higher than a 620.
Do you have jumbo?
Unfortunately, we do not. So we pretty much go, strictly Fannie, Freddie, VA, FHA, stuff like that.
I say Dean had one for jumbo too. So we can just do
I can just throw
a standard conforming with like a higher FICO, because we get those quite often.
So can you do like a $2 million VA loan then?
So we do have it capped at 1.5, but if you do have something that's at 2 million, then definitely let me know. And a lot of times we can get approval on that to get that going.
Yeah.
But I just basically, once it goes over 1.5, I need to get with my director on it to get the approval.
Okay.
You want to just run that one, Andrew, and call it 1.5?
Can.
See what it looks like, I guess.
Sure.
I don't know. Let's see. I got a 623 VA.
Is it a purchase or?
That'll be a purchase. I'll run this. Actually, I think I talked to you.
Then do you know if they're exempt from the funding fee?
No, not exempt.
Okay, and we're going to finance funding fee?
I think so.
Okay, and then is this first time use or subsequent?
First time, correct? First time?
Hello? Hello?
Hi, Dean, it's Kelsey. Good morning.
Hey, good morning. I'm on a webinar. Can I call you back in a little bit?
Absolutely. Call
Give
me
me
back.
about an hour. Thanks. Okay, thanks. Bye bye.
Okay, that sounds good. All right, bye.
So this was first time use, right?
Yep.
Okay, and then I'm assuming 30 year.
What's that?
Are we looking at 30 year on here?
Yeah.
Okay. Just one thing, quickly on here, if you can adjust this to whatever you guys like. So if you guys really want to get granular with, and a lot of times I might see this like a refi. Someone, they might want to keep it at like 25 years or something like that. They've already put 5 years into equity or something. And then we can actually just kind of go down to like 25 years, 25 and 6 months, or 25 and 1 month, all the way down to like 10 months, depending on what your clients are looking for or what your borrowers are looking for. So that can really kind of help tailor to their needs. And then what do we have for the appraised value on here?
Let's call it 950.
I'm assuming that's the purchase price as well.
I wish, but we'll, for this scenario, we'll play along.
Okay. And then what are we looking for on the loan amount?
So ideally they want to do 100%.
Okay. And their FICO was what?
Was 623.
Okay. So yeah, if we were over $1 million on there, we'd probably run into an issue when we're pricing this.
Right.
And do you have a zip code?
Let's just do 92008.
And then are we waiving any escrow and insurance?
No, it'll be full doc, everything.
Okay. This is one thing as well on here is that we can, obviously waive taxes and insurance, or we can just waive the taxes or just the insurance. So you can get,
At Pennymac, what are the limitations there though? Can I do that on a 5% down conventional, or does it have to be 80%?
so basically you can put it down on basically anything. There's not really any limitations to it.
Okay. Oh, that's awesome.
And then how many borrowers do we have?
This one it'll just be the veteran.
Okay. And then are they self-employed?
So correct.
And then we'll just go with your lender paid comp. And then are we waiving the admin fee, the underwriting fee? Basically what that does is that rolls that $895 into the loan amount.
Sure.
So this is actually going to give us a little bit higher pricing, just to kind of let you guys know. And if we do get like a QM fail or anything like that, and basically our comp is off or something, the numbers are just off slightly, a lot of times we can actually bypass that by doing the fee waiver, and that'll get us to clear.
But can you remind us what the underwriting fee is?
It's $895.
Okay.
Is that on all loans?
No. So on VA like Earls and Streamlines, you're looking at $595.
And a conventional FHA is going to be $895.
Yeah.
Okay.
And then I'm assuming 30-day lock, and then do you know their DTI?
DTI is 30-day lock's fine. DTI was what are we looking at? I think they were at like 38%. It was super low. The income's like 55,000 or 52,000 a month on the business.
Okay. A couple other things to kind of note on here, and we can kind of go back and I'll show you guys this in a second, but we can go and get pretty granular on the rate as far as like going down to the thousands. So if you're looking for a specific rate, you can just type it in here and it'll just give you the 3 options. Otherwise, if we do it just without putting anything in there, it's going to give us the full stack, but you can always still open up the full stack. But you can see here that we have our red thumbs down on these first couple notes. And basically what we're having is, the regulation Z. So this is showing that, our points and fee ceiling isn't high enough to cover where the borrower is paying more. So obviously we'd want to look for these green thumbs up. So if we kind of look at that, like the 2.125, you can see that we're getting the QM fail, but we want to be around there or something. That's where we would come back into doing the fee waiver. Now, if we don't have that fee waiver in there, I'm going to imagine that we're going to have more red thumbs down. Or not pretty close. That didn't really affect us too much in this situation. One thing I should actually note is that I did mention the going down to the thousands. Unfortunately, on VA loans, we can only go, based off of quarters. So you wouldn't be able to do like 2.124 or something like that, which sometimes actually gives you better pricing on your conforming.
So am I looking at this right? Is that 2.25 going to cost this guy 15 grand?
Yeah.
Okay.
But
So what's par on this one? Where's par on this?
So we're about 2.75 is where we're actually starting to get a credit. And that's where we're getting credit of 4208 or 0.433 points. And we can get a breakdown of that as well. So if we click on here, we can kind of see where all of our points or our hits and credits are coming from. So we can see we're getting, dinged pretty bad as far as the FICO. And then
oh man, he's a veteran.
And then obviously with the full doc, we have a little bit of a cost there. And then it's actually wraps into your lender paid comp. Now, one thing that you're going to see right here is that I know you guys had your lender paid comp at 2%, and it's showing it here at 1.543. Now that's because the max basically commission payout is 15,000. So what this is doing is basically kind of capping it, and it's just automatically putting it in there for you.
So explain why is there a cap at 15,000?
That's just part of our regulations. I think you can make a case sometimes, and might be able to get approval to bump it up to 20,000. That's just basically a Pennymac guideline.
So what happens to that other, I mean, let's say that if I was pricing this with, I don't know, pick your biggest competitor, whoever it might be,
Quicken or
and
UWM.
they're going to pay me 18.5 on the same loan. What happens to that extra 3,500 bucks?
So basically, it's just getting kind of washed. So obviously, that's going towards either like a principal reduction, or going towards closing costs fees.
So okay, right. But in this situation, where would I see that? Like, how would I?
You're not. So what you're going to see is that instead of having a 2 points on your comp, that it just adjusted it to 1.543.
Got it. Okay.
And then a couple other things that we can look at as well. So if we select this, we want to get that borrower some credits, we can come up here to view fee estimate. And that's going to give you a breakdown of all the fees that we have. So obviously, the things that we can't shop for,
right,
being the appraisal fee, and this is basically just your estimated fees here. These are the things that you can shop for. So title and escrow, you can. It does say that you can't shop for your appraisal, but you can. If you guys have an appraiser that you guys like, just let us know, and we can work with them. But we do have about 9 different AMCs that we work with. And well, actually, I think we just added a couple more. So I think we're up to 12 or 13 now. And we basically go by who has the best turn time given in, the specific area that the appraisal is needed. So if we don't get a response back from, appraiser within 48 hours being assigned, then we're automatically going to reshop that to another AMC to make sure that we get, somebody in line really quickly. And then if they can't do it within the 2 weeks, we're going to reshop it as well. And then basically, once you've paid that initial appraisal cost, for the first appraisal or AMC that you guys went through, it's actually we're going to actually cover the difference in cost. So if we went, through one AMC, and then let's say it was like $600 or something. And then we said, okay, hey, look, they can't do it for 3 weeks. We're going to find a different AMC, and they can do it in like a week and a half or something like that. We're going to go to them. And if it's, a difference of $200-300 or something like that, Pennymac will actually cover that cost. So it's not it won't be like any kind of surprise cost to you or the borrower or anything. So you can see basically in that rate, it has everything in here already, kind of tied in.
And then are you guys just grabbing like this escrow fee? Is that some average that your company's seen over time?
Yeah, pretty much. And then
okay.
if you wanted to, we can always go over here to view this is basically our appraisal and title ordering platform. Let's see. Change this. I'm not sure what to change it to. Anyways, you can go into here, and then you'd be able to get a more exact price on your appraisal as well as title if you're using us for title. And if you are using us for title, we actually use Boston National Title. But you can kind of see it. Do you guys use your own title company?
Yeah, usually.
Okay.
I think everyone uses their favorite.
Okay, and you can kind of see that, obviously the prices are usually pretty close from what I've been hearing, the feedback that I've been getting. Sometimes, they have some title companies title and escrow that's actually a little cheaper. So you can kind of get an idea. And obviously, if you're using a title and escrow company that's a little less, then your numbers are going to kind of reflect that a little differently.
Yeah, but a snapshot, that's pretty nice.
Yeah, exactly. So this is what it will actually go out if you are disclosing with Pennymac default fees. These are the fees that are going to go out to the borrower.
Okay.
Now, if you're disclosing with your own, title and escrow, then we would actually kind of do the math and then update it. We can actually send that over to you guys to view to make sure it looks okay before we go ahead and get that out to the borrower. Oops. So you can kind of get an idea. So if we're looking at like 2.75, getting that credit of 0.433, but we can come back over here, and if we don't waive, if we don't waive that fee, you'll notice that this actually goes down, should go down a little bit. So you can see that we're getting, $5,000 back now instead of I think it was a little over $4,000. So there's just a couple different things that you can do to kind of play around with these numbers. And if we were to like switch this over, and let's say we wanted to do just a conventional, let's put this out, something like that. This is where we can get a little bit more granular. Well, obviously we don't have the MI. One of the key things that Pennymac likes to boast is that we do have the lowest cost MI in the business. And if you guys are finding that, another company or a competitor or something like that has better MI, we'll actually automatically throw an 1/8 on there to kind of make up for it. We don't really see it very often. I mean, it's happened maybe once or twice, but just to kind of give you an idea. So in here, you can kind of get an idea as well. So see now we can kind of go into those thousands. So we're looking at 2.874. And a lot of times you'll actually see that this will be a better rate than the 2.875. So like right here, the 3.374, you're actually getting more cash back and lender credits than you are at 3.375. So it's a nice little selling point. I don't know if you guys are using Loan Sifter or not, but obviously, not a lot of people are typing in those kind of obscure rate notes. And, you won't necessarily see that, but you can kind of tell, like, right here, we're looking at about, 4 basis points or a couple basis points a little bit better than the other rate, which can actually kind of help you guys on, selling it as well. And I'm always happy to go in and, if you guys are seeing that we're off a little bit on, any pricing, if you guys have a screenshot or something like that, send it over to me. And I'm happy to go in and, try to beat it. If at the very least, I can at least match it more times than none. So do you guys have any questions regarding like the pricing and kind of how we're looking on there?
No, that's actually pretty cool. I like definitely the snapshot of like the fees is nice, just how quick it is.
Yeah,
I guess I'm just trying to process the whole like idea of the cap on the commission, because it sounds like any loan over 750, there's sort of money just lost somewhere. And I don't mind if I can totally understand if I could see that number, like that 15K was my cap, and then all of a sudden I had like a pile of money that that I could see that the borrower was getting. I guess when it just disappears, that's the part that makes me kind of just wigged out a little bit.
Yeah, I mean, it doesn't necessarily like disappear. It just reduces your comp because we can't go over the 15,000.
Yeah, I'm understanding that. And then I'm wondering where that $3,000, like, let's say if we just looked here, like if you, if there was like, if I could buy down a rate for $3,000, I couldn't receive it in commission, but I could buy it down, like, and get the guy a better rate.
You could definitely do that. So
okay.
You can kind of go into different rates, and then obviously your commission is going to, kind of supplement that, but it's not necessarily going to change it too much. All you're kind of doing is you're basically just kind of adjusting the rate, because the Pennymac's not going to go over 15K. I mean, if you guys would like, I can definitely see about getting the the exception at 20,000 if you guys are seeing that you guys are, that's a pretty common occurrence.
It could be in our market.
Okay.
I mean,
Yeah, I mean, considering, the average house is the average sale price for a house right now is pretty close to 750.
Yeah.
I mean, might even be in the eights. I think this, who knows, it was over the weekend, it could have been gone up, but
Especially on the conventionals. I mean, most of our home purchases, I wouldn't say most, I'd say a good half of our home purchases are over $1 million.
Okay, so this one's at a loan amount of 750. Just kind of give you guys an example.
Yeah.
Now, if we're to click on here, we can see that we still have our full comp on here. So it's not gonna, it's not gonna affect it too much. It's usually when you're, obviously the higher the value as far as like VAs and stuff like that. That's usually where you might run into where it's gonna adjust your comp a little bit.
got it.
So if you were trying to, let's say this was at like 1.875 or something like that on your lender paid comp, and it was reducing it. I mean, all you're going to be doing really by adjusting the rate is by, kind of expanding that to getting it closer to your full comp amount, which is still going to be the 15 grand. So, it's not going to make much of a difference other than, the cost to the borrower.
Right. Got it. Okay.
Yeah, and then obviously I'm always here to help you guys out. So, if you guys need help walking through the portal or just getting logged in or anything like that, you guys all have my cell phone number. Feel free to text me, call me anytime. It's one of the kind of the things that we boast, or at least me over here, is we really focus on the service, and we feel like as long as we're communicating with our brokers and their loan officers, and they can get an idea of what's going on their loans, we eliminate a lot of confusion and frustrations.
Yeah. And then
I get a lot of feedback where people have a hard time getting a hold of their AEs, or you'd be working with a broker's operations manager who kind of helps with the conditions, kind of your single point of underwriting. But if we ever needed to reach out and talk with underwriting as well, we can set that up as well.
okay.
All right, cool.
And then how what kind of turn times do you guys have for getting things closed and
Yeah,
when you've got full docs, things like that?
yeah, absolutely. So on your purchases, you're looking about 2 to 3 days on underwriting, and then about 3 to 4 days on refis. Depending on how clean the file is, I see files getting closed or getting clear to close within between like 5 and 8 days.
Okay.
Way up to maybe like 14, 15, depending on what we have and everything. So the cleaner the file, obviously the cleaner we're gonna get clear to close and get everything moving.
Okay.
Definitely pretty good on those turn times.
Right on.
Cool.
Yeah.
Sounds good. Well, I appreciate you coming on, Paul.
Yeah, thanks for
It's
having
good to
me.
get some refreshers and kind of see some live pricing scenarios there. So I think that's good for everybody to see and kind of answer some questions that we have sometimes on some of these files and your guys' process.
Yeah, and I believe Natalie is your guys' processor, right?
Yep.
Yeah, and then if she will, I can reach out to her as well if she wants to a little refresher. We can kind of do something similar, but more towards the submission and processing part of it.
Yeah.
So if she thinks, if she would like us to do that for her, we can kind of set another thing up like this for her.
Okay.
Yeah, I definitely, one of the things that got me kind of connected with you earlier on was a buddy of mine that he's been doing a lot of business with Pennymac lately, and he said it's been really streamlined compared to a couple of the other lenders that he's been working with. So that was one of the main reasons I reached out. Like, okay, let's, we're still figuring out who our favorites are.
Yeah.
So I figured, what, let's give these guys a shot. Let's try and send them some business and see how it goes.
Yeah, I mean, that's our goal too, is, we want to be, your top 3 lender. We want to be right in there in that mix. And then we're constantly upgrading our system. Since we've been in the wholesale side of things for about 3.5 years. In that time, we've become the fastest growing wholesale lender. And we're already ranked in the top 10 at, I think, number 7. So we were able to do all that just in, a short 3.5 years. So we're doing something right. But there's still some things that, definitely need to be cleaned up a little bit. And that's definitely stuff that we're working on. And we take your guys' feedback very seriously too. So if you come back to me or, send me an email or something like, hey, Paul, this is great, but I really wish this would happen. Or I wish I could do this. And then I actually, any kind of feedback I get like that, I put into, we have a separate mailbox that we, is monitored by all of our directors to see what we can implement into the portal and make things a lot easier for you guys. So this is kind of geared around, around you, and it's still, still in the process of being fine tuned.
Very cool. Well, we got to get on to our
Yeah.
all-team meeting, but again, I really appreciate you coming on. I'm sure we're going to be in contact, and we have some, loans coming down the pipeline that maybe we can price out over there and see how it goes.
Yeah, absolutely. Well, hey, I really appreciate the time today, guys, and feel free to reach out if you have any questions, and I'm happy to help.
Sounds good.